Hello and welcome everyone to the Commodity Report for the 20th of April 2022, presented by myself, Phil Carr, at the Gold and Silver Club. So this week, at the start of the week, we have seen copper prices break out to 1 month highs. Natural gas prices, they broke out to all-time highs. Gold prices at the beginning of the week as well, they broke out to 5-week highs, just under $2,000 per ounce. We talked you through to expecting the lead up to the Easter break, this upside momentum on commodities to take advantage of, building into positions on energies, on metals, and then we took the opportunity on the public holiday on Monday to bank into strength. We banked over 1,700 points now on gold. We also took the opportunity last week to bank over 2,000 points on energies as well. So just over this week so far, 1,700 points banked. So for every one lot contract that you would be trading, that is essentially $17,000 of profit. For every 10 lot contract that you'd be trading, that's $170,000 of profit just within the matter of a few days here, capitalizing on the rally that we mentioned to you to expect at this time of year into the middle of April. All of that has indeed played out. Many of you, I hope, have capitalized on that as well off the back of our discussions through this to expect this momentum into the Easter break. However, now that we're past that period, typically going into this week and then into the last week of April as well, you can see outflows and opportunities to yet again sniper in at lower prices. We've already started to see that, in fact, after we booked a windfall amount of profits on Monday. So on Monday, we basically booked profits on gold at $1,993 per ounce. 24 hours later, into Tuesday's session, we've already seen gold prices drop over $50 to the downside, or a 500-point move to the downside. So after we've locked in further profits, we've then seen the pullback and the correction. Commodities, they don't move up in a straight line. They will zigzag. And with that, that's where regularly you want to bank into strength. And then when you do see these corrective price action to the downside, you're patient, you wait for key areas of liquidity to get retested, and then you come back in at much, much lower prices. And this is the trick to really make sure that you're not getting FOMO, you're not buying at the top of the move or the wrong point in the cycle. You're being patient, you're waiting to sniper in at the right time, build into a number of positions fast, and then capitalize on the next slingshot move higher that we see time and time again throughout this commodity super cycle. As we saw last week, energy prices, crude oil in particular, rose 10% just within 3 days. We caught that very fast profit to the upside, banked over 2,000 point profit in less than 1 week. And now this week, we've already started to see on Tuesday, energy prices, they pull back again 5% to the downside. Both Goldman Sachs, JP Morgan, they've been in the news over the last week for the fact that they continue to take advantage of this commodity super cycle, which they believe is going to last for the next decade. So there is a decade-long wealth-generating opportunity for you to really maximize over the next 10 years. Think about it, the next decade for you to make life-changing wealth during this commodity super cycle. Banks such as JP Morgan, Goldman Sachs, they are making billions capitalizing on the current super cycle. And of course, it's not so different for the retail trader. Last month, as we talked you through, we booked over 30,000 points profit with our clients at the Gold and Silver Club. It was an absolutely immense month, but also an immense quarter as well. We saw gold have the best performance in over 2 years. Not only that, last month we saw energy prices, oil broke out to 14-year highs. We saw natural gas prices, palladium prices, copper prices, they all broke out to all-time highs. Many agricultural markets broke out to multi-year highs. The list really goes on. There's over 27 commodities that we saw break out to multi-month and multi-year highs over the last quarter. So many opportunities for you to capitalize on. But again, if you're not making money in this market, you have to ask yourself, why not? Because you absolutely should be. And I would put it down to either you're an inexperienced trader or you're using technical analysis, which just does not work. You'd end up getting chopped up all the time. You get delayed confirmations all the time. And essentially, it would just be death by 1,000 cuts as you keep losing money. We definitely do not want that for you. You want to be utilizing a lot more edge with your trading. This is where you need to be utilizing data, statistics, market intelligence, learning and understanding the capital flows in the market, learning the daily, the weekly, the monthly, the quarterly cycles for each commodity, key areas of liquidity, the intermarket correlations in the market, the ratios, and then align that as well with the fundamentals, with the macroeconomics, with the geopolitics, and how the hedge funds, money managers, banks, and institutions are positioned in real time. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.